Welcome to the deep dive. We're cracking open a really focused piece of analysis today,
Mm.
looking specifically at the launch pipeline that's really heating up the Gurgaon real estate market right now and, well, through 2025.
Yeah, we've got some key excerpts here from a report that really zeroes in on exactly that.
That's right. This report gives us a pretty detailed snapshot, doesn't it, of what new residential supply is coming online in Gurgaon over the next, say, year or two.
It does. A very close look.
And our mission, well, it's to take this stack of info, pull out the absolute core insights, maybe highlight anything that really jumps out as surprising,
Yeah.
and give you, the listener, a clear, digestible understanding of what this analysis is telling us about where this market is, heading.
We're talking types of projects, who's building them, the key
Yeah,
locations.
exactly. And the outlook, what the report sees coming next.
Okay, so let's dive in then. The overall picture. What does this report paint?
Well, it seems pretty clear from the outset, doesn't it? The launch pipeline in Gurgaon, it's heavily skewed towards these large-scale integrated townships.
Right. Not just standalone buildings anymore. We're talking comprehensive communities
Hmm.
and often backed by, you know, prominent developer brands, listed companies mostly.
And they're concentrated, right, across what this report calls the prime growth corridors.
Yeah, places like New Gurgaon, the Southern Peripheral Road, SPR,
SPR, yeah.
Golf Course Extension Road,
Yeah.
and definitely the Dwarka Expressway. That comes up a lot.
And the scale is pretty significant. The report mentions launches in 2024 alone added, what was it, over 15,000 units?
Over 15,000. That's a lot of new supply hitting the market in just 1 year.
It really is. But what's really striking, I think, is the report's take on the demand side.
Ah, yes. It describes this robust demand-supply equation, particularly visible, it says, along the Dwarka Expressway.
Okay.
And it gives specific numbers for that area. Between 2020 and 2024, let's see, roughly 16,000 units launched. Just under 16K, actually, 15,994.
Okay, 16,000 launch.
And slightly more absorbed in that same period, 16,502.
Wait, hang on. More absorbed than launched. How does that work?
Exactly. The report uses this phrase, near instant absorption, for new supply in that specific area.
Near instant absorption.
Yeah. And those numbers seem to back it up. It highlights that demand is just incredibly strong. It's almost immediately soaking up whatever becomes available.
Wow, near instant absorption of thousands of units. I mean, that really underscores the intensity there.
It does. And the report notes this absorption is particularly brisk. That's the word they use, specifically in premium projects. Those priced above 3 crore.
So the higher end is moving really fast.
Yes. And there's also a clear format shift identified in the new launches.
Oh, what kind of shift?
Well, the majority are premium 4-bedroom apartments.
Yeah.
Generally priced, the report says, between about 4.8 and 8.6 crore.
Okay, so bigger units, 4 beds.
Exactly. Which suggests, it's increasingly driven by end users looking for larger homes, not just investors maybe targeting smaller units like before.
Interesting. So people are buying bigger and they're buying faster, especially at the higher end. And price-wise, where's the real heat, according to this report?
Again, the Dwarka Expressway really stands out.
Yeah.
The report includes a detail that, well, kind of blew me away, actually.
Yeah. What's that?
Average rates along the Dwarka Expressway have almost doubled since 2020.
Doubled. Seriously. Since 2020, that's only 4 years.
I know, doubled.
That's not just momentum, that's explosive growth, isn't it? What does the report say is driving that kind of surge?
Well, it largely connects it to that combination of improving infrastructure. The report calls them infra-catalysts, and that really intense, almost instant demand we just discussed.
Right.
So basically, big infrastructure pushes are meeting this huge pent-up buyer demand in that corridor.
Okay, so demand is off the charts, prices surging, especially in certain corridors like Dwarka Expressway. Who are the players capitalizing on this? The report talks about a specific developer playbook.
Yeah, this analysis suggests the launch pipeline is now heavily controlled by listed or institutionally backed developers.
Right.
You know the names: DLF, Godrej, Signature Global, Elin, Whiteland.
The big ones.
The big ones. The report basically says they now manage the marquee pipeline.
And why is that concentration, this focus on established players, why is that significant, according to this analysis?
Well, the report argues it actually helps reduce the overall delivery risk in the market.
Ah, okay. Reliability.
Exactly. These are developers with established track records, better access to capital, presumably more robust processes. The report suggests this provides greater confidence that projects will actually get completed and maybe closer to on time.
So it's not just about the fancy brand name, it's about the perceived reliability of actually getting the keys. Makes sense.
Yeah, that seems to be the argument.
So what are these big players doing then to make their projects stand out? I mean, it sounds like a competitive, high-demand market. The report mentions some key differentiators they're using.
Yeah, a few things. A major theme the report highlights is the emphasis on branded residences.
Branded residences. So, like, tied up with luxury or hotel brands.
Often, yes. To offer sort of elevated services, a specific lifestyle appeal. Architectural trends also get a mention, like the extensive use of glass facades.
Right, you definitely see those sleek, modern towers popping up everywhere. Very shiny.
Absolutely. And another huge focus seems to be on amenities, specifically mega clubhouses.
Mega clubhouses.
Yeah, the report mentions some reaching sizes up to 2 lakh square feet, 200,000 square feet.
Wow, that's enormous. That's not just a small gym and a party room then.
No, this is like an entire ecosystem. Pools, sports facilities, cafes, social spaces, designed to be a major selling point and really integrate into daily life.
Okay, so branded lifestyle, striking design, and these massive amenities. That sounds like the formula these developers are banking on, based on the report.
That seems to be the playbook, yes.
Let's try and bring this to life a bit. The report lists some specific examples from the 2024-25 pipeline. What jumped out to you from that list?
Yeah, the selected projects list is pretty illustrative. Take Gurgaon, for example. Sector 89, New Gurgaon.
Okay.
The report puts its price range between about 1.6 and 3.5 crore. And it notes its proximity to the Dwarka Expressway. So that represents a point in the market, below that ultra-premium 8 crore range we discussed earlier.
Right, a different segment. How about M3M Gulf Hills in Sector 79? The report had an interesting detail there, I remember.
Ah, yes, Gulf Hills. It highlights the price jump in resales, from 9,000 rupees per square foot up to 14,000.
Before completion.
Yeah, that kind of appreciation before handover. It really shows the market's belief in that project and location. Quite something.
That is a substantial leap. Okay, moving over to the SPR, Whiteland Aspen gets a mention.
That one's described pretty simply but effectively. Premium construction, good location, short and sweet.
Fair enough. And Signature Global Titanium, also on SPR.
That one stands out for being low density, which is a key draw for many people.
Right, more exclusivity, more open space.
Exactly. And priced around 16,500 per square foot, according to the report.
Okay, makes sense. On Golf Course Extension Road, Puri Vallis.
The report notes that Phase 1 sold out really rapidly, and it points to its quality build as a factor. Seems quality is a recurring theme.
Good to hear. And DLF Arbor, also on GCER.
That one's firmly in the premium tier. The reported range there is 6.5 to 10 crore.
Definitely moving up the price scale there. And DLF seems to have a presence in multiple key areas. Pravana Southwest in Sector 77.
Yeah, those are highlighted as being part of a large integrated community, which, again, ties back to that dominant township model the report keeps pointing to.
Right, the big picture communities.
Then there's Elon, the presidential, in Sector 106. Another substantial project mentioned 50-acre mixed-use development.
50 acres.
Yeah, big scale. And a wide price range, too, from about 3.8 up to 10 crore.
Okay, and Whiteland Weston Residences, Sector 103.
That project specifically emphasizes branded hospitality, clearly leveraging that Westin Hotel brand name and service standard, trying to attract buyers looking for, well, that specific level of luxury and service.
Makes sense, connecting back to the branded residence trend.
Exactly.
Yeah.
Then DLF Pravana North in Sector 76. This one sounds visually striking. The report describes it featuring 50-story glass towers.
50 stories, tall and shiny, reinforcing that modern aesthetic again.
Yeah. But here's the one, the detail that really threw me. Right at the absolute top end of the spectrum reported. DLF The Dahlias, Sector 54.
Ah, yes, the Dahlias. I saw that. What did the report say about those?
This is where the report touches on the absolute pinnacle, the stratosphere of the market. These are categorized as ultra-luxury units.
Ultra-luxury.
With a reported price range, get this,
Yeah.
of 65 to 90 crore.
65 to 90 crore per unit.
Per unit, yeah.
Wow. Okay. That's a completely different universe from the other projects listed. It really highlights that extreme high net worth segment that's actively buying in Gurgaon.
It certainly shows the sheer breadth of the market, doesn't it? From that, 1.6 crore entry point we saw with Goddard Zenith, all the way up to, well, that.
Incredible range. So, okay, with all this activity, the rapid absorption, the sheer scale, this premium focus, even this ultra-luxury tier, what strategic takeaways does this report offer for potential investors or maybe even buyers looking at this market?
Well, the report outlines several key strategies based on its findings. One is pretty clear: hold through possession.
Meaning, don't flip it quickly, don't sell prematurely.
Precisely. The report suggests that waiting until you actually take physical possession is pretty crucial to, and I quote, capture full upside in terms of price appreciation.
Okay, patience pays off according to this. What else?
Another point is to bet on branded residences.
Ah, back to the brands.
Yep. The report explicitly states they offer better resale value.
So the brand cachet actually translates into tangible value when you eventually sell.
It does, according to this analysis, yeah. The report also advises investors to target corridors with infracatalysts.
Right, like the Dwarka Expressway example.
Exactly. The upcoming metro line there is a clear infrastructure driver that the report identifies as boosting value. So look for those catalysts.
Infrastructure is key. Any other sort of practical advice from the report?
Yeah, a couple more points. It notes that liquidity matters, and it recommends preferring listed developers.
Okay, why listed specifically?
Well, it reinforces that earlier point about reduced delivery risk. Choosing developers with strong financial backing, public accountability, it's seen as a safer approach, according to this analysis. More transparency, maybe.
Right, a focus on stability and transparency. That makes sense, especially with larger investments.
And finally, there's a pragmatic note: monitor delivery risk.
Okay, so even with the big names.
Even with established names, the report advises buyers and investors to always account for potential delays. Just be realistic.
Good practical advice. Real estate development always has its variables, doesn't it?
Always.
So, okay, we've covered the current market, the players, the strategies. What does this report project for the outlook? Say, beyond 2025, maybe looking towards 2030.
Looking ahead, the report forecasts significant continued supply, particularly on the Dwarka Expressway again. It projects over 18,000 more units coming into just that corridor.
18,000 more. Wow. More supply where we just saw that near-instant absorption.
Right. It suggests the demand is expected to keep pace, at least to a large extent, and the pricing outlook, well, it suggests that premium projects are likely to continue seeing faster price rises compared to the rest.
The rich get richer, property-wise.
Seems like it. The report also points to the ongoing role of policy. Things like RERA enforcement, digital registration, they're highlighted as factors helping to reduce overall market risk and improve transparency.
So that regulatory environment provides a bit more confidence, maybe?
That seems to be the implication, yes. Adds a layer of stability.
And going back to that, frankly, astonishing price doubling on the Dwarka Expressway since 2020, does the report anticipate that kind of pace continuing, or does it moderate?
Well, not doubling again in 4 years, no. But the report specifically projects a further substantial rise. It estimates between 40 to 60% increase.
40 to 60%.
Yeah, further 40-60% rise in average rates just in the Dwarka Expressway corridor by 2030.
That's still a huge projected increase on top of the massive gains already seen.
It's significant, yes. Shows continued strong confidence in that specific area's trajectory.
Okay, so pulling it all together then, what's the main picture? The core message from this report's deep dive into Gurgaon's newest launch market.
I think the core message is that Gurgaon's new supply story right now is dominated by these large, branded, amenity-rich townships.
Yeah.
And crucially, they're located in these infrastructure-backed growth corridors.
Big, branded, well-located, and full of features seems to be the summary.
Pretty much sums it up.
And for someone looking to engage with this market as a buyer or investor.
Well, the report concludes that if you approach it strategically, particularly, as it says, by holding until possession in trusted projects within these key corridors, the analysis suggests there's still potential for continued strong returns.
It really paints a picture of a market being shaped by large-scale, high-quality developments meeting incredibly robust demand, especially at that premium end.
Yeah, it highlights where the significant investment and perhaps more importantly, the significant buyer activity are concentrated right now. It's quite focused.
It really is. So, all right, here's a final thought maybe for you, our listener, to consider based on everything this report has shown us today. Given this unprecedented pace of absorption and the projected price growth in areas like the Dwarka Expressway, coupled with the sheer scale and the luxury features of these new branded townships, and let's not forget the emergence of that truly ultra-luxury 65-90 crore segment, What does all this imply about the changing profile of the typical Gurgaon property buyer or investor today? And maybe how might that shift fundamentally alter the city's identity and landscape in the coming years, beyond just the physical buildings themselves? Something to ponder, perhaps.